Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Tuesday, the 26th of September. Starting off with the FTSE 100, which is wedged right underneath the 200-day moving average. That's 76.40. We're between that and the 50-day line, 75.25. Notionally in a rising wedge, which is a negative, but so far still the jury's out on that particular formation. Major resistance here around 77.80. That's the level to break if we get an end-of-day close back above the 200-day line. Otherwise, it's a test of the 50-day line and an uptrend line from last year. As I said, at 75.25. RSI at 56, so that might be the reason that the market hasn't fallen further, given that we're on the right side of neutral 50. That tends to add positive momentum to a situation and stem losses. Moving along to the DAX, which has been in rolling over mode over the last couple of weeks. Here we had that support line projection from back in May, 15,100, and that looks like that will be the target for this market, while we will remain below the old support from July and August around 15,400. So barring end of the day close back above that, we have the risk of 15,100. RSI at 33 now, so not too far away from oversold. That sort of ties in with a down day down to that May support line and then hopefully bouncing from there. But obviously one can't now rule out a total rolling over this market down to test March support of 14,400 or so. But let's see if we can get support there at that May line. Moving along to the Dow, which still is rather mixed, but we've had the bounce off the 200-day moving average, 33,700, the level there, and also, I suppose, just above June-July support, around 33,600. RSI at 36, so can't rule out a test of that June-July support area, and obviously even more than that on the downside, given that post-June we've had a head and shoulders formation, and a special one given that we've had two shoulders on either side and also multiple failures at the 50-day line, which is now falling. So if this was a bearish setup, it would be a very good one, and obviously given the time of the year, that also is a negative. Moving on to Bitcoin, which has died a death, which might be a good thing actually, given the way that we're right on a support line there from January, 26,300. Below that we could test the 24,800 zone, which is June to September support. RSI below 50 at 45, so that's a negative. Minimum required to get this market going again would be a proper end-of-day close above the 50-day line for 26,800, or if you're fussy, back above the 200-day moving average at 27,800. But at the moment, that 200-day line looks like the best this market is going to muster. If we break below 25,000 on a sustained basis, then it's a March support line projection of 23,100, which could be the target for this market. On to pound dollar, and looking rather weak, it has to be said. Obviously, the interest rate scenario here has affected this market. Obviously, hasn't affected the FTSE on the upside, but it's affected the pound on the downside. And looking here, we broke back below the 200-day line at 124.20 or 30, let's say, back at the time of the interest rate non-move, let's say. And we've got the major neckline support there around $1.2020. That looks like that'll be the target, even though the RSI is now at 20 and the most oversold it's been since the good old days of the Liz Truss administration. So $1.20 zone, that also ties in with the floor of that falling trend channel from June as well. And if rates have peaked, obviously, that would bring this market lower. Maybe on to the stocks, and the cupboard relatively bare, which is disappointing, but I suppose we're getting used to that. Starting off with eEnergy, which I suppose is rather simply in a range between 9 pence and 20 pence, hoping for the 20 pence zone to be hit as soon as the end of next month at the current rate of progress. We've had unfilled gaps to the upside, which gives us more confidence that this market will hit to 20 pence and maybe even much more than that, and obviously that would be the big prize for the bulls. I suppose we'd be looking for a target somewhere towards the 24-25 pence area if we can break through 20, but at the moment above the 15 pence level, looking for 20 on Aura. 50 and 200-day moving averages both rising and helping out there. Moving on to chill, where it looks as though something is going on in a nice way. Here we've had the Bear trap from below the August support there, around 4.4 pence, above 4.4. Looking for up to 8 pence, which is basically post-July resistance for the shares. Also quite exciting that we've broken through the 50-day line and 200-day lines around 5 pence. I think I said before, we want to see this market through 5 pence to give us 8 pence, ideally by the end of next month, and hopefully much sooner. Moving along to a requested stock from one of my more loyal followers. Here we've got eEnergy, and we've gapped up through the sharply rising 50-day moving average. We've got a rising 200-day line as well, so that suggests that above 5 pence, recent support, post-August support, we could head up to 8 pence as soon as the end of next month, or even sooner. Remember, the gaps through the 50-day line tend to be good, reliable signals. Speaking of reliable signals, we're still probably waiting for one here on fusion antibodies. The good news, I suppose, is that for the first time, probably since May, in a meaningful way, we've got this market through its 50-day moving average. Shares up a decent amount as well. We were looking for the 50-day line of 6.4 pence to be broken. Above that, we can then once again look for 9.5 or 10 pence, which is basically post-July resistance for this market. Also helping out is an uptrend line in the RSI window. So maybe this is finally it for the, well, to get the low in for fusion antibodies, especially given that last week I think we went to the lowest levels around 4.9 pence, and so it's a bear trap reversal on that stock. Moving along to a stock which also looks as though something's brewing. Here we've had unfold gap to the upside back in August. And the current situation is we've got what I call the sideways shuffle above a rising, or through a rising 50-day moving average. That's at 6.6 pence. Gapped up today as well, which is always decent. And we've held above the top of the gap there, around 6.5 pence, above 6.5. I would say we're looking for up to 8 or even 8.5 pence, which it was support on the way up, and also the area of the 200-day moving average. So let's see if that works. That particular call works, even though there's not much liquidity here, and it is a relatively punchy call. On to a stock which never heard of before, which always makes it much more exciting, global connectivity. Here we've had the shares bouncing off very oversold areas, around 2 or 3 on the RSI scale. Broke through the 50-day line yesterday, which is now rising at 0.5 pence, and looking perhaps rather ambitiously by the end of next month to hit 1.8 pence. At the top of a broadening triangle from back in March. If that works, and especially given that it's on Aquis, I think one would be very pleased indeed. Haven't looked at Kavango for a long time, and it looks as though finally shares are on the move. We've got the 50-day line rising near the lows, and we put in multiple lows below 0.6 pence. Old support for the shares was around 0.95, so that's the target here, certainly while we're above 0.66 pence, which is neckline resistance to 0.65 actually, which is neckline resistance from the end of July. Moving along to a stock which had decent news today, finally. I think that a lot of Oxford Biodynamics fans who've been getting slapped and kicked and punched over the last year or two, as you can see from, actually longer than that, for years actually. Years of suffering there, but we've had an unfilled gap to the upside through even the old June resistance at 14 pence. Above 14, we're looking for 19 at the top of a broadening triangle from the beginning of the year. So let's hope that finally the shares go up and stay up, which is obviously quite a difficult thing to do in current markets. On to Optibiotix, which is still basking in the afterglow of the deal with Boots. The shares gapped up last week, and above that gap at 25 pence, we're looking for up to 43 pence as soon as the end of next month. Quite a punchy call there, but we've got a sharply rising 50-day line. We gap through it, which is a nice signal. And at least, as I said, while we're above 25, looking for 40 pence plus on Optibiotix. A stock which has been quite horrible over the last, 2023 to date has been Prospex Energy. We have had one or two attempts, or a few attempts, to get through that 50-day line, but we haven't been above it properly since February, until perhaps today, where the low of the day is actually above the 50-day line, which is quite an achievement. Also very strong candles there, opening at the low, closing at the high. We've had that over the last, 3 out of the 4 sessions. We've also got a rising 50-day line, which is very pleasant. I don't think we've had that before when the shares broke through the 50-day line, so that's a breakthrough. So certainly now looking for around 10 pence, and the 200-day moving average by the end of next month or sooner, while we're above 6 pence and the 50-day line, bullish divergence line there, hopefully helping out there as well. Pelatro is next, and here you can see that we've got the shares trying to break higher. We've had obviously a terrible run here, but bullish divergence there. We're back above the old low there from August at 0.77, above that, looking for up to the top of that falling trend channel at 1.75 pence, although obviously there are fundamental factors in there over and above the charting position here, which actually looks quite good. Moving on to Supreme, which I don't think I've covered in years, and here you can see that we've gapped up through a rising 200-day moving average, bear trap gap reversal here, above 93 pence, and at least while we're above the floor of the gap there at 99 pence, looking for a retest of last month's resistance through 130. Perhaps by the end of next month. If you're cautious, maybe you wait for an end of day close through the 50-day line at 113, but that would obviously give away much, or at least some, of the upside. Stock which has been resting on its lows quite happily, or not, in the recent past has been Symphony Environmental. Here we've gapped up off the low, and the view now is that while there are no new lows at 6 3/4, looking for at least a retest of the 9 1/4 area by the end of next month, off the back of the latest Yemen news. Trellus is the next contender, and here looks like we've got a mid-moves consolidation above the 200-day moving average at 7.2 pence. Above that, looking for 13 pence by the end of next month, which would take the shares back to where they were basically back in October. Last but not least is Tern, which I always love including, just so it upsets the bears. Here we've had the shares delivering the promise on the upside, at least initially, with the rising 50-day line sideways shuffle, as I call it, and could be a U-shaped bull flag, which takes the shares back up to the top of that rising trend channel from March at 8.3 pence, which is obviously not that much upside, but obviously would be rather better than we have been over the course of the late summer. That's it from me today. More updates tomorrow.